about Toronto real estate in 2025? It's been a wild ride from record condo completion to price shifts. 2025 was the year everyone expected the Toronto housing market to collapse, but that's not exactly what happened. Prices moved, sales dropped, a condo market struggled, and interest rates finally shifted, but in ways nobody expected. In this video, we are breaking down the key numbers and trends you need to know before buying or selling. Stay tuned for the real story behind the statistics. Let's start with the big picture. The average home price in the GTA landed around 1.1 million, but dipped by 5 to 7% compared to 2024. By year end, prices settled near 952,000, a 5.8% drop that tipped the scales in buyers' favor. Total sales bounced back to approximately 76,000, marking a 12.4% increase after a slow start to the year. Meanwhile, the active listing count surged over 27,000 units, more than 50% higher than previous years, flooding the market and creating more choices for buyers. Interest rates finally shifted, but slow, with small changes throughout the year that didn't shift affordability dramatically. Now that we've set the stage with the broad market statistics, let's zoom in on one of the most important segments, the condo market, where things got particularly interesting. The condo market was the biggest story of 2025. Early in the year, sales dropped by 22%, but by the last quarter, new condo sales jumped 31%. Thanks to buyers seizing opportunities. Average condo prices fell 7% year over year, settling around 681,000 to 702,000, reflecting a market softening amid a record 31,000 plus condo completions. This oversupply led to the slowest condo market in over 30 years, with construction start plummeting 88% in Q1 as developers pause amid uncertainty. The affordability factor was the major pain point. Condos in investor-heavy building 905 townhomes and pre-construction assignments saw the most significant price corrections. But not all condos were hit equally. Boutique builds in prime locations still performed well despite the oversupply. So while condos struggle in some areas, the overall market was much more dynamic. Now let's take a look at how timing played a role in securing the best deals in 2025. Detached homes in the core of Toronto held their value better than expected. While detached homes show a price drop of around 6% in spring, they still perform better than condos. Overall market average settled lower by about 7% by the end of the year, with some neighborhoods facing deeper corrections. Buyers who waited for the fall or winter found great deals. If you time it right, like one of my clients, you could snag a unit 10% below spring pricing. So we saw that buyers could benefit from waiting until fall or winter. But how did interest rate impact affordability in 2025? Let's dig into that next. 2025 was the year of hope and then frustration. Buyers spent half of the year waiting for rate cuts that didn't come quickly enough. Mortgage renewal hit many investors hard. Even with small rate changes, affordability didn't shift dramatically. As a result, many buyers stayed on the sidelines, unsure if it was the right time to jump in. With affordability still a major factor, let's now have a look at how detached homes compare to condos and who really won in 2025. When it came to detached versus condo, detached homes continued to overperform condos, not because they were cheap, but because supply stayed low and families prioritized stability. Condos, on the other hand, became the affordability option, but they were also the riskier bet. With oversupplies and softer rental markets, condos faced a tougher time holding their value compared to detached homes. So how did the buyer philosophy play into this? Let's take a closer look at how cautious buyers navigated 2025. The sales volume told the real story. Buyers were cautious. They waited for clarity on interest rates, prices, and inventory. The fear of missing out that drove the market in previous years had disappeared. Buyers were more strategic, focusing on value, inspections, and the long-term potential of their purchases. After seeing cautious buyers, let's take a look at how the rental market played out in 2025. The rental market finally stabilized in 2025. Some downtown micro units even saw price declines, but larger units or those in family-friendly neighborhoods remain extremely competitive. After years of non-stop rent increases, the market has cooled, but renters still face stiff competition for larger spaces. We saw a lot of surprises in 2025, so let's explore some of the biggest shocks in the market this year. Certain neighborhoods saw a quiet rebound, catching even seasoned investors by surprise. Inventory didn't explode despite the higher rates, showing resilience in certain parts of the market. Many sellers chose not to sell, which kept prices from falling harder and gave the market a chance to stabilize. So, after all these surprises, what's next for 2026? Let's look ahead to what we can expect in the Toronto real estate market. So what does this all mean for 2026? We might finally see more movement in the market, but it will depend on interest rates, buyer confidence, and immigration trends. If rates drop significantly, we could see the spring market heat up fast. If not, 2026 may look a lot like 25, steady, cautious, and waiting for a breakout. Whether 2026 brings a recovery or a correction, it's important to plan ahead. Let's talk about what we can do to stay ahead in the coming year. 2025 brought challenges and opportunities, especially in the condo market. Want to know what 26 has in store? Make sure you subscribe to my channel so you don't miss my full Toronto real estate 2026 forecast. It's coming soon. If you're planning to buy or sell in early 26 and want a personalized strategy, reach out anytime. My contact information is below.